Hi there, welcome to my video. My name is Hartini Jaafar from the Accounting and Finance Department at the Faculty of Management and Economics, University Pendidikan Sultan Idris. Today, I'll be guiding you through a presentation on a specific topic from our course. Now, let's begin. At the end of this video, it is expected that you should be able to achieve the second learning outcome, which is to explain the impetus for positive accounting theory. The development of PAT was driven by the need to understand how economic forces like incentives affect the choices managers make in financial reporting. It emerged as a response to the criticisms of normative accounting theories which lack explanatory power. Now, let's discuss the impetus for PAT or what triggers the development of PAT. Some significant explanation of the PAT's development is the strong influence of several academic works on positive economic theory, efficient market hypothesis, capital asset pricing model, CAPM, agency theory, and capital markets research. Watts and Zimmerman aimed to develop an economic-based accounting theory, and they advanced an empirical methodology that focused on economics-based explanations and predictions of accounting practice. PAT is said to be originated from the efficient market hypothesis, EMH. According to Fama, who is basically a famous economist that came up with this hypothesis, the EMH is based on the assumption that capital markets react in an efficient and unbiased manner to publicly available information. The assumptions include the one idea critical to the validity of the EMH, that is, the belief that all information relevant to stock prices is freely and widely available. They are universally shared among all investors. These are the publicly available information. Therefore, it is proposed that as there are always a large number of both buyers and sellers in the capital market who wants to buy and sell shares or stocks, share price movements always occur efficiently, that is, in a timely, up-to-date manner. Therefore, shares are always trading at their current fair market value. So that is the proposition of the EMH. So we can say that the perspective taken for EMH is that security prices reflects the information content of publicly available information, and this information is not restricted to accounting disclosures. So market will react to whatever information that is publicly available. And then when we extend this hypothesis to capital market, it is assumed that at any given time and in a liquid efficient market, security prices fully reflect all available information. There are, however, three forms or variations of the hypothesis: the weak, semi-strong, and strong forms, which represent three different assumed levels of market efficiency. So for that, I strongly suggest for you to find out what these variations really say about the market. So consider that as your homework. Next, we look at how capital market research facilitates the development and acceptance of the PAT. A large number of published research in leading academic accounting journals, especially in the 1980s to 2000, examine the relationship between financial statement information and capital market, referred to as capital market research. Ball and Brown 1968 and Beaver 1968 were the pioneers in empirical capital market research who tried to ascertain whether accounting numbers contain or convey information about firm performance. The EMH, in a way, is one of the factors for the birth of capital market research. Capital market research seeks to answer a wide range of questions. A sample of the questions examined in previous research in this area include: number 1, do current cost earnings have incremental information content over historical cost earning? So which one is better, the current cost or the historical cost? Number 2, do differences in corporate governance structures affect the degree of information asymmetry in capital markets, and in turn influence the timing and strength of the relations between security returns and earnings information? Number 3, does managerial ownership affect the informativeness of accounting numbers because of the separation of corporate ownership and control? And number 4, does the perceived quality of an auditor affect the relation between corporate earnings and security returns? So these are some of the examples of the capital market research. As a matter of fact, my PhD thesis was also in this area, where I look at the value relevance of accounting information disclosed by firms during specific period of their life cycle, and whether such information has any effect on share price. And finally, let's talk a bit about agency theory. I suppose you have covered this topic in various other accounting courses such as management ethics and corporate governance, and also in integrated case study. So semua mesti dah pandai ni. So I will only briefly talk about this theory. In 1976, the publication of Jensen and Mackling's article on agency theory had a major impact on PAT. In agency theory, the firm is analysed as a nexus of contracts. This idea suggests that firms are nothing more than a collection of contracts between interested parties. So who are these interested parties? The shareholders, the managers, the directors, the employees, the customers, and to some extent, the public at large. The contracts are produced with the aim of guarantee that all parties acting in their own self-interest are at the same time motivated towards maximizing firm's value. So PAT accentuates the function of accounting in reducing agency costs and its essential role in an efficient corporate governance structure. So that is the main contribution of agency theory towards the PAT. So agency theory could be one of the theories mostly used in accounting studies to explain the roles of various monitoring mechanisms used in a firm, such as the board of directors, they have the audit committee, the auditors, also the use of voluntary accounting disclosures. That's all the time we have for this topic today. Thank you for your attention, and I look forward to seeing you in the next video. Bye bye.